And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Thursday, March the 31st. I'm John Hoagland. Thanks for trusting me with your time. Last day of the quarter. And as usual, and every day, A.C.H. Anything can happen. If you're in the markets already, hopefully things are going your way. We're always looking forward to your success. Today, as every day, we're going to seek accurate context, look for good risk management levels, and exercise patience. And I think patience is a good idea for a lot of these markets this morning. Opening in range, near value. I don't see any real big hurry to get into anything. We've had some economic numbers come out. We know that the OPEC meeting is today. I just saw they have decided to maintain their current output increase for the next month, just over 400,000. Barrels per day increase in production. It's not probably going to affect things that much. We also have information that President Biden is likely to or has maybe already announced plans to release 1 million barrels a day from the Strategic Petroleum Reserve every day for the next 6 months to help relieve inflationary pressures. I'm sure he's getting a lot of pressure on that himself. As far as economic numbers this morning, the 7:30 jobless claims numbers came up. We're looking for an initial 197,000 initial jobless claims. It came out 202,000. A little bigger, 5,000, not that big. Continuing jobless claims, however, were considerably lower. They were looking for 1,350,000, came out 1,307,000. Personal income and outlays. Income, they were looking for an increase of 5%. They got it. 0.5%. No, we didn't get a 5% raise. They were looking for a 0.5% increase. They got it. Spending, they were looking for a 0.5% increase. It came out 0.2%. We're spending a little bit less. Maybe that's a good thing. We're still waiting for the 9:30 nat gas numbers. Stock indices were indicating a kind of a mixed opening prior to the economic numbers. Looks like we're pretty close to the bone here, pretty close to settlement on our equities. We're going to be looking for opportunities as the day goes on. I got a crazy dog running around here. Again, President Biden is, if he hasn't already, likely to release information that they're going to be releasing 1 million barrels a day out of the Strategic Petroleum Reserve for the next 6 months. And OPEC, just before the forecast, did come out and say they are going to maintain their increase, no extra increase, no lack of increase. They're just going to do exactly what they said. Good morning, everybody. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here. And make sure you subscribe to our YouTube channel. You can get notifications when we do go live. Speaking of going live, there will be no podcast today. Instead, I'm just going to do the usual recap. Dan's out of the office, so they're not going to be doing the podcast today. You'll be stuck with me again for the recap. Today is Thursday, and I'm excited about that because it is Make Hoag Money. Right after the forecast, we're going to go into a Zoom room. We're going to take a look at the S&Ps. We are going to discuss any trades that we think might be viable first thing here this morning, and you guys are going to vote. You guys are going to decide the outcomes, or at least the entries and the outcomes of these trades, and you are going to make me money. Now, it seems as if this is going pretty well. We're always looking for feedback on everything that we do. If you have any good ideas or feedback or constructive criticism about Make Hoag Money, please let us know. I'm going to set up a new schedule for it We're going to do it on Tuesdays and Thursdays. Tuesday and Thursday for Make Hogue Money, about 8:20, right after the forecast. Get together and see if we can't come up with some good trade ideas. We're doing it in sim initially. If it goes well, if we succeed, we're going to start doing it live. And I'm looking forward to doing that. I think that'll be even more fun. But it's, again, all on you. You guys are going to let some of you speak. You can speak. Everybody can just type into the chat. We're going to vote on trades. And we're going to see if we can't be successful at this. We've had some fun so far. We're still up in the account. That's a good thing. We'll see if we can't add to it today. All right. So this morning, looking at the VIX, it was up a little bit, about 3%, 1996, still down below 20, but a little jump in that this morning. I find that a little bit interesting. The dollar index up slightly at 98.13, and the yield on the 10-year down to 2.3%. Still keeping a pretty close eye on that yield curve, as I know all traders are. Good morning, everyone. I got to say good morning, Shaw, first in the room. You win the prize. Zach, good to see you. Tachyon, Theo, Frederico, Brian, Dan, Trader, Manuel Caesar, Zach, Tom, good morning. Got some snow up there, I see, huh, Tom? We've been raining here for about 24 hours straight. Zachary, good morning. Nico, James, did I miss Theo? Hi, Theo. I want to make sure and say hello to you. Nico, good to see you. James, Scott saw and he conquered. Chilling with Dylan. Bill Phillips, Devont, Three Lions Insight, George Adams, Wadad, good to see you. Luis, Expediter Dean, Sarah, always a good morning to see you. Terry King, Zachary, Denise, good to see you. Dan, good to see you, buddy. Snow up in Milwaukee today. My brother's outside of Milwaukee. And he was just saying he's got some snow up there as well. Last day of March, we're still getting snow. I don't know if this winter's ever going to end. Brody, good morning. Andre, Marcelo, good morning to you. Vince, good morning. Soren, good morning. Trading Research, only caught part of the coaching session yesterday afternoon if possible. I'd like to get a link to the recording. Vince, Tachyon, Kirill, Robert, Ron, David, and Daniel. Good morning to everyone. All right, I'm not going to waste too much time this morning. We've got let's make Hogue Money after the forecast. So we're going to try and end this forecast at about 8:20, and I'll open up the Zoom room immediately after that. As soon as everybody's in there, we'll go briefly over the rules, start talking about trades, and see if we can make some money for me today. Dorian, good morning. Some chat about the current testing hypothesis. Does pre-market breaking lows and high have an effect on U.S. opening direction? Was true the last 2 days. Anything's possible. Anything can happen. ES broke daily low before market opening. Yes, it did, but when we're going to look at that here right now, as a matter of fact. Let's jump in and see what we're looking at. Let me get this straight here. All right. This is the daily in the S&Ps. Yesterday, adding 11,000 in open interest, largely above weekly kickoff high, that 4,600, big fat round number. We've got balance forming up here. 1, 2, this would be day 3. Yesterday was an inside extended trading hour range. Today we have another inside extended trading hour range. It would appear that that weekly kickoff high is becoming a decision point and a little bit more magnetic than repulsive. Upside naysayers added shorts on a down day yesterday. Is it a down day? We did close above weekly kickoff high. Settlement was 45, actually below weekly kickoff high. We closed not 45.96 even, and then we recovered after the close. Remember that big spike to the downside yesterday into the close. As soon as that finished, we started snapping back. Well, right now we're still wrestling with the Weekly kickoff high, 4,600, that big fat round number. Here's that link again. I'm trying to keep an eye on, on the chat here as well. So the market seems to be digesting, looking for new information. Did we get any help from our economic numbers today? That's yet to be seen. We have to digest all that information. Here's the 30-minute chart. So here's what Tachyon was talking about. The market was kind of holding above settlement. Settlement again, 45.96 even, 45.96 even, 4,600 is weekly kickoff high. The market was largely holding above that level right before the forecast and into the open. The market tested down below value low. This line right here is volume value low from yesterday. 70% of the volume, according to where the point of control is where volume and value is from yesterday. So the market looked down below and then came back, and we're just kind of hanging here towards settlement. There's not a lot of overnight inventory in this market. Any overnight inventory is reconciled because here we sit right about settlement. Here's where the overnight inventory started, was right here. And we're right here. There's not a lot of overnight inventory. We've got no gap. I'm going to suggest trying to stay patient this morning. There's very little change in the perception of value. Again, extended trading hours inside the previous extended trading hour range. Last night, inside extended trading hours, even inside regular trading hours yesterday. So I'm going to be kind of focusing on the balance rules. I'm going to be looking for opportunities to fade the extremes of this balance, maybe around yesterday's low, previous day's value low, maybe looking at opportunities up here near yesterday's high or yesterday's value high, to look for opportunities to just to be able to limit risk. When we're range bound, we fade the extremes. If we break out of this range in either direction and we find acceptance, then we go with it. Unfortunately, we don't have any real information that says that there's a big change in the perception of value. Now, Devonta saying could probably put a profile over the last couple of days. We can do that. Okay, here's value low for the session from yesterday, day before yesterday, night before last, yesterday, last night. This is our profile. It really just kind of covers yesterday's value area very nicely. So this is just saying it that this market right now is in range and in value and in balance. I'm not going to be looking for big opportunities here. It's the last day of the month. Of course, anything can happen. We have to remember that we're in a situation where headline risks are always possible. We can't anticipate those. So I'm going to be looking to trade balance rules in short time frame levels unless we break out. If we take out the highs and we find acceptance above there, we go with it. We take out this low over here, we find acceptance down below that, we go with it. Let's see what's going on in crude oil. We're just about to hit the open. Now, we're still in a pennant formation. The SPR release OPEC meeting may have caught some news, some new longs. Yesterday, we added 11,000. The EIA, we lost 3.1 million barrels in crude stock. That may have caught some longs kind of stuck up here, but we're in short time frame control. When we are in this coiling activity, there's not a lot of other time frame or longer time frame activity here. It's short time frame. The longer time frame is sitting pat, waiting for something to change, and that's what we should be waiting for as well. We've got the market coiling. We've got higher lows. We've got lower highs. There's energy building, if you'll pardon the pun. Again, I always tend to say that when we're building energy in the equity, in the energies markets. But we're far from breakout on either side of this. We've got a long way to go if we're going to break out below this or break out above this. And we're hanging here at weekly kickoff low. Take a look at the 30-minute chart. Okay. Gap yesterday, closed the gap above that. Another gap left here. Last night, when the president announced he was probably going to be releasing crude oil, we had a big bang to the downside. That bang to the downside took us to point of control from 2 days ago and weekly kickoff low. We are largely holding below weekly kickoff low. We are going to be opening with a gap. 103 even has supported, became very popular for an area to trade, became supportive. Now we're looking at it from the other angle again. We're looking at it from the downside. If we do find resistance here, at the very least, it gives us the opportunity to limit the risk. We're opening out of range, out of value, out of balance from yesterday. Does that mean that there's a good opening range trade probability? It might. Okay, we've got the opening range. We're looking at 40, 60 ticks again. It's a big opening range. It's inhibitive. And we're still in that opening range. What's our overnight inventory look like? Largely to the short side. If we can't continue to get a push to the downside, all of these shorts may bring price back up to weekly kickoff low and give us an opportunity to limit risk there. Again, that opening range is pretty substantial. Too rich for my blood. Probably not going to be playing it. Let's see here. 76, yeah. Here's that opening range again. Still inside it. No real push. No real confidence. $20, 60 ticks. Yikes. See if we get a good breakout either side of it. Might be an opportunity for us. Again, be cautious. That's a lot of risk. Here's the Nasdaq. Similar yet different. The Nasdaq weekly kickoff high remains resistant. It's been very difficult for us to penetrate that level. We've got buyers up there that have continued to try and push and exhaust the sellers up there, but the sellers have yet been exhausted. Yesterday, we had a inside extended trading hour range, and we didn't do really anything to open interest. We added 300 in open interest. Not a very important number. It's kind of moot. We're in a 2-day balance. We're still in that balance. Inside extended trading hours. No real rush to be in any big hurry here. Again, we opened in range and value yesterday. It took an hour and a half, 2 hours for us to find the best trade location of the day. We're in a similar situation here. We don't have any gaps. We don't have any overnight inventory. We're opening relatively close to value from the previous day. The market has not changed value all that much, so stay patient. Look for better trade locations as the day goes on. I find on days like this, in the equities at least, and even yesterday, even though there ended up being a pretty good breakout of the initial balance opportunity in both the Nasdaq and the S&P. Here was the initial balance here. We took out the initial balance, traded all the way back up here. It was a pretty good downside opportunity that brought forth, found some buyers down there. I'm not in a hurry today to try and find a trade. On days like today and yesterday in the equities, if I go looking for trades, I'm going to chop myself up. I'm going to stay patient. I'm going to wait for the market to get to a level where I can limit risk and the trade scares me. That's what I'm looking for. I'm looking for an opportunity for the market to come to a level where I can limit the risk and the trade frightens me. That's the trade I'm looking for. I don't want to go looking for trades today. Just trade what we see, be patient, be cool, calm, collected. There's no reason that we have to trade today. No, we're all traders and we should be trading. And we have this mindset that if we're not doing anything, we're wasting time. And that is a toxic mindset. Sometimes not doing anything is doing the right thing. And we can still watch, we can still be engaged. Okay. Gold. Tuesday's rejection below weekly kickoff low looms large now, doesn't it? We had our bear flag. We tried real hard to accept below it. Well, we did to a degree. And yesterday we rejected it. Okay, buyers came back in. We added 4,600 in open interest after a pretty swift rejection of lower pricing on Tuesday. It's in a tight and tough spot here. We've got our weekly kickoff low, which is 1926. We've got this trend line here, which is largely kind of loosely, put it a little bit higher here, is loosely our lower trend line from the breakout of the bear flag. Now we're right back up against it here this morning. Our overnight low relatively close to the weekly kickoff low. It's like a grain of rice between two chopsticks here. What do we do with that? Well, we're range bound. Here's yesterday's range. Settlement is here. Overnight inventory got too short. We're back in range, back in value. Patience. Patience. That's all we have to do. We just have to be patient. We have not filled this gap down here. There's plenty of other visual targets above in the form of naked points of control. Last week's high. Just try and stay patient. You go looking for trades today, you're going to find them, but they may not be good. One other thing. This is kind of something I've been kind of watching all week. This week, we put in kind of a head and shoulders low here. Okay, this is a reversal pattern. We were looking earlier in the week at the base of the late spike here from Monday, Tuesday, Wednesday, Thursday, from Monday as kind of a pivotal area. And for some reason, it still seems somehow important. This is the base of the late spike. This is a swing high, another swing high. Market comes up, gets a back above it, trades back to it on this little swing low here, swing low, back to it. It seems as though it's somewhat pivotal, but you got to be careful with it because, again, the long above, short below, if it becomes somewhat magnetic, can get us chopped up. Where are we now? We're in the middle of range. We're in the middle of value. Again, try and stay patient. I know it's the last day of the month. Things can go haywire at any time, and we're all probably a little jazzed up thinking, okay, well, we got some information. It's the last day of the month. We got jobless claims. We got all kinds of things going on. We may have high expectations for today. We may just get let down with those expectations. Don't forget, it's unemployment tomorrow. Unemployment tomorrow. To the euro. All right. Weekly kickoff high has been proving somewhat resistance. Open interest indicates we may have some new trapped longs up against this weekly kickoff high. We added 6,100 in open interest yesterday, and any longs that came into the market in regular trading hour session yesterday are currently in pain. Take a look at the 30-minute chart. So here's yesterday's range, and any new longs up against this level, again, currently in pain. Overnight inventory to the short side. We got a little bit of a range bound kind of situation here at the previous day's point of control. Gap rules. If we can't get this gap closed at some point early in the session today, we've got plenty of repair to do down below. We've got this large gap down here looming below that is a structural weakness to the upside. So if we can't close this gap, we're going to be looking for opportunities to trade in the direction of the gap, which would have us short and looking for opportunities to get through that gap. I'm going to take this and take that off because we have checked this point of control in regular trading hours now officially. Not a lot going on, but still this market is out of balance from yesterday and offers perhaps a little bit larger or bigger or earlier opportunity. The 10-year. Looky here. We got a downside move. We've got a bear flag forming. Volume was a lot lower yesterday. We don't know what's going to happen today, but when we have directional activity and we have narrow ranges in the opposite direction, this can create a bear flag. And if we break out the low of that bear flag, it might provide a pretty decent downside opportunity for us. Take a look at this on the 30-minute chart because I've put the chart lines on here. We are in serious risk of taking out the low of this trend line here. I'm going to clean it up a little bit. We're in serious risk of taking this out. If we accept down below this, all of the new longs and anybody that's been thinking this is going to be a low might start to get a little bit nervous. We could see this market tank to the downside. We have a gap open. We have overnight inventory to the long side up against a support level. This market is coiling. There is energy coming into this market. And I'm very interested to see if we can sense an acceptance below this trend line back into value from yesterday. The first target would be value low from yesterday. That would be a value area special situation play, and it would be a very nice trade. But if we do break out and we start to look lower, I think there's a lot more to this downside move. After all, we are all well aware that we've got higher rates coming. Natural gas. Balance. Put a little box around it. Rollover's over. We added 13,000 in open interest yesterday on an up day. Some buyers perhaps interested in coming into this market. Volume wasn't all that tremendous yesterday, but not bad. What are the balance rules that we're going to be looking at? I mean, this is my main hypothesis today is to be looking at the extremes of this area of balance for opportunities back towards the center. Balance rules, fade the extremes. Buy low, sell high. Breakout rules, upon acceptance outside of balance, you go with it, or you go with it. Got a little bit of space up to weekly kickoff high here. Just going to stay patient. Some days it's clear. Some days it's unclear. Here's the 30 in the natural gas. We're seeing a little bit of pre-open activity here, taking us to last week's high, weekly, yesterday's high. This is the weekly high up here in extended trading hours. We're trying to, it looks like, break out above yesterday's value area high / settlement / last week's high. This looks like an interesting spot. There may be some fish here. Maybe some fish. Let me keep an eye on that. I want to go back real quick, see what the opening range trade did for us in crude oil. Yeah, maybe we even did get 2-to-1 on this move. Not quite, but such a big opening range. It's hard to try and take it. But opening range remains the low of the session in crude oil so far. Back to the 30, back to weekly kickoff. Are we going to resist? Are we going to reject or accept? Looking much like it's going to be accepted. We do have a lot of overnight shorts here. So we may get a move back to try and close the gap to yesterday. It's a considerable gap. That would be a large move. So right now, with the opening range, the low of the session, with the market showing some time and some creating some volume above this weekly kickoff level, it'll be a tough trade to try and get into to look for longs. But we've got several nuances saying long is the way to go. Anything, of course, can and will happen. All right. Dan, good to see you. Retail to pump $3.89. I think down here we're paying over $4 and even more for premium, Tom. Yeah, you guys get it. You guys are getting it easy up there compared to down here. Of course, Illinois, lots of taxes. All right, let's take our deep breath. Stay humble, grateful, and creative in your trading today. I'm going to be in Make Hogue Money at 8:20 sharp. Got to fire a couple of things up here. So if we see you, we'd be happy to see you. Again, volunteers for those who want to speak. And let's have some fun. Let's make some money for Hogue. And again, next week, Tuesday and Thursday. So Monday group coaching. Tuesday, Make Hogue Money. Wednesday, group coaching. Thursday, Make Hogue Money. And all the other stuff. So you guys are going to be tired of me? Man, I don't know. All right, let's have some fun. If we don't see you, have a great trading day. Trade well. We will see you for the recap today at 3 o'clock. Again, no podcast today. So we will see you shortly. Trade well today.